Ben had a credit score of 780, not because he was rich, not because he knew some secret financial trick. He had simply spent years doing boring things correctly. Bills paid on time, credit cards kept under control, no missed payments, no unnecessary debt. Eventually, that little number on his credit report became something he was quietly proud of. 780. Very good credit. Then one expensive month came along. His car needed repairs. A family expense came up. Work was stressful. And for the first time in a long time, he stopped keeping track of everything at once. His credit card bill arrived. He saw it and thought, I'll deal with that later. Later became next week. Next week became the following month. By the time he realized what had happened, it wasn't just a bill sitting in his inbox anymore. The payment was seriously overdue. For years, he had treated his credit score like something you built once, almost like a house. Do the work, finish it, and there it is. But credit doesn't really work that way. Your score keeps responding to what you do now, and your history of paying debts on time is one of the most important parts of that picture. He eventually paid the bill, but paying it didn't magically erase the late payment history. A few months later, he learned what that could actually cost. He was shopping for a car and applied for financing. The interest rate he was offered was worse than he expected. That was when the number on his credit report stopped feeling like just a number. Now imagine two people buying the exact same car for the exact same price. One qualifies for a lower interest rate. The other qualifies for a much higher one. They drive home in identical cars. But over the life of those loans, one of them can pay thousands more. Same purchase, different cost of money. A lender isn't using the score to decide whether you're a good person. It is trying to estimate risk. How likely are you to repay borrowed money as agreed? And when lenders see more risk, borrowing can become more expensive. His first instinct was panic. Maybe close the card, apply for a new one, move balances around, find some quick way to push the score back up. But there was no magic reset button. So instead of trying to outsmart the system, he went back to the habits that had built the score in the first place. Every account went back to being paid on time. Balances came down. Automatic payments were switched on, so one chaotic month couldn't quietly become another missed due date. Then came the frustrating part, waiting. Because good credit can take years to build, and repairing damage rarely happens overnight. Eventually, things began moving in the right direction again. But by then, he thought about credit very differently. A 780 score wasn't a trophy. It was access. Access to better borrowing terms, more flexibility, and potentially a lower cost when he needed to borrow money. Protecting it wasn't about impressing anyone. It was about protecting future choices. Years of good habits had built that score. One difficult month reminded him how quickly circumstances could change, but it also taught him something more useful. Good credit habits aren't something you finish, they're something you keep doing.